Hey everyone, welcome back to the show. Joining me this week is the one and only Tom Lee. He is the co-founder and head of research for Fundstrat, as well as the chairman for BitMine, one of the most bullish people I know and have had on my show. Tom, thanks for joining me.
Great to see you.
So how are you feeling about these markets? Because it seems like, stock market at an all-time high, data points coming out that all seem very, very positive. But I just had an analyst on saying that we're in a silent recession. So what's your take on all this?
Well, we're constructive, and I think it is a good sign that many people are skeptical because we believe this is one of the most hated V-shaped rallies, and we are making new highs. And instead of people justifying new highs, we have many people saying markets should not be here because the Fed is not cutting rates or there's tariff uncertainty. So that skepticism is healthy for markets.
Why is it healthy for markets?
Well, it's a sign that there's still price discovery underway, because if people were all bullish in the public realm, when everyone's bullish, then it's probably in the price. But when there's plenty of skepticisms and reasons to be skeptical, that allows markets to have positive surprise. And I think that's true of crypto. Bitcoin, is making all-time highs. It's kind of silent, right?
Well, when a lot of other people have been bearish and almost anticipating a crash, you've been sort of one of the people out there in the public eye saying, no, we're going higher. We're going higher in the S&P. We're going higher in Bitcoin. You're predicting, I think, even higher prices by the end of the year. So why do you feel that way?
Well, for equities, it's really straightforward. Number one, the economy has proven to be incredibly resilient. I mean, I don't think people should take a half-empty take. We've thrown massive tariffs. We had essentially a Cuban Missile Crisis moment, and yet S&P earnings are going to grow 12% this quarter. And there's not any signs really of sustained or a reigniting of inflation. There might be some inflation temporary, but that's very different than inflation dynamic taking root. And the second is people says that deficits and this current budget are so bad that no one's going to buy our debt, but yields are behaving. 10-year yield was 5%. 2 years ago, it's 4.5% now. And in terms of multiples, I think people are getting this wrong. There's a lot of people saying the market's expensive because the PE of the market should be the average of 16 or 17. Now, I've been an equity analyst for 34 years. And I used to cover stocks. I was a tech analyst for 17 of those years. I never once found an analyst who made money saying you should trade at an average PE. Like literally you either have arguments for PE expanding, and then you just have to determine when you've hit bubble, or PEs contract when the story is getting worse and there's no bottom. And we just threw 6 extinction events at this S&P 500 in the last 5 years. COVID. Then a bullwhip supply chain effect that normally should bankrupt businesses. We had the fastest surge in inflation in 2 generations, the fastest Fed hikes in history. We had tariff Armageddon. I mean, literally a Cuban Missile Crisis moment for the stock market this year. And then the US bombed Iran's nuclear facilities. Each of those should have caused a crash in the stock market. And yet the S&P recovered every time. If we were talking about this as a single stock, we'd say, look, if you threw 6 things at a company and it survived, it should have PE expansion. And yet most people think the market's expensive.
Coin Stories is proudly brought to you by Gemini. Investing in Bitcoin has never been easier with Gemini's Orange Bitcoin credit card. Earn up to 4% back in Bitcoin on everyday purchases like gas, dining, groceries, and more. With no annual fee, no foreign transaction fee, and no exchange fees on your rewards. This summer, also get 10% back in Bitcoin at golf courses. Plus, sign up today and get a $200 Bitcoin bonus when you spend $3,000 in your first 90 days. Apply now at gemini.com/Natalie. Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for over 7 years, have over 10 billion in clients' assets, and a team of 100 plus. Their weekly newsletter is a must read. It's written by their CIO, Matt Hogan, one of the best minds in the business. I highly recommend it. It's witty, bold, and quick. Takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts more than 2.5 gigawatts of electrical capacity across 3 continents. Learn more at bitdeer.com. Well, a lot of people are concerned about the debt, though, because isn't a lot of this liquidity coming from the fact that the government has been spending a lot and we're having Congress continue to spend and we just passed another like $5 trillion bill? What are we going to do to solve the debt when all of this is essentially just pumping up stocks?
When I graduated college and I moved to New York City, and then at Union Square, there was this billboard that had the national debt, and it like went up every day. And I worked at Kidder Peabody, and we had people saying, does anyone realize how big the national debt is? How much it is for every man, woman, and child? That was 35 years ago. So 35 years later, I hear the same exact conversation. Mm-hmm. So I think it is a problem. I obviously don't want the U.S. government debt to grow, but is it a crisis? It seems like capital markets are functioning. So yes, it's a crisis, but I don't know when it's a crisis.
That's a good point. So do you think that the Fed should lower interest rates? And if they do so, let's say in September, what will the market reaction be?
Well, part of Fundstrat's sort of framework is that we don't say what policymakers should do, okay? But I can offer a separate opinion. And the reason is that we just have to respond to what to those market conditions. And that's why, for instance, I think people got really tripped up this year because there is Trump derangement syndrome. And so they viewed policy actions like tariffs as policy errors. Whereas at Fundstrat, we just simply wanted to see how we should treat the market and trade that market. And with the Fed, I don't have an opinion if the Fed should be cutting or not, because Powell is Fed chair and whatever he decides is correct. But if I was a computer and using AI to make policy decisions, then I would say that the real interest rate is super restrictive right now, because core CPI is 2.7, or core PCE, we'll get it tomorrow, and Fed funds is 4.5. That's 200 basis points real. The housing industry is getting strangulated. Mm-hmm. And the only reason both core PCE and core CPI are elevated is because of that, what they call a statistical residual way that rent is calculated, shelter is calculated. Housing is deflating, mm-hmm. but it's still treated as inflating in CPI. So the Fed is literally making a policy decision based on something that's 18 months stale. Mm-hmm. So
if they were to lower interest rates, based on past experience, I feel like if they hike interest rates, that's risk off. But also when they lower interest rates, sometimes all of a sudden the market gets spooked and people sell off and go into safety. What do you anticipate? I mean, I don't think that they would even cut more than 25 basis points. But if they cut more, wouldn't that signal something to the market?
I think everyone has a different interpretation. Like, again, that's why, I don't have an opinion what the Fed should do.
Yeah.
But if the Fed were to resume cutting, mm-hmm. there's a bearish and a bullish take you can make. Because, the bearish take is, oh, man, the economy's in trouble. But the bullish take is, well, the Fed's finally getting that inflation has to get cut. Mm-hmm. And how the market ends up interpreting it, we'll find out. Mm-hmm. I don't know.
So what's your take on Bitcoin as we head into, say, the fourth quarter eventually in the fall? Do you think we're going higher?
Well, I think that, to me, the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they're not too. They don't have a lot of conviction around something. To me, I can say easily it should supplant gold. And so I think Bitcoin should be, over 1 million over time. And then I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So should be good. I mean, so I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250.
You think by the end of the year?
Yeah.
I would love to get your take on the corporate Bitcoin treasuries because we're seeing so many more emerge. Some people are a little nervous and they don't think that all of them can survive or that it might create some sort of a bubble similar to the .com era. And others are extremely bullish on literally all of them. So where are you at?
Well, you can't create a bubble because you're buying Bitcoin. So unless you think Bitcoin's a bubble, it's not a bubble, right? I think the crypto treasuries there's going to be winners and losers because there is a scarcity to it, actually. So Bitcoin is scarce. And so it's proper for companies to have Bitcoin on their balance sheet over time. And I think banks will, because banks, as Bitcoin really does get recognized in its proper place as how you move money in the financial system, then the banking sector will actually stake Bitcoin as well. They're going to want to own it, I mean. And so these treasuries are doing what other businesses will eventually do. But for them to get a premium to their Bitcoin because of how they're executing a strategy, that is the scarce part. MicroStrategy has already proven that their strategy works because they started on August 12th, 2020. They bought 260 million Bitcoin. Stock was $13. Now they own close to 5% of the Bitcoin network.
Yeah.
And they announced a huge buy last week, but the stock is 400. It's gone up 30 times. So that's truly executed in a masterful way. I don't know if the 50 other Bitcoin treasury companies I don't know how many are. I actually looked at that website.
BitcoinTreasuries.net.
Yeah. And there's like 50 companies. Not all of them are doing treasury strategies.
Right.
But I think a handful will emerge as winners, but not everyone.
Are you bullish on some over others? Like, can you name any?
Well, I would say, again, I don't necessarily want to necessarily recommend one or the other, except for one that's in our granny shots. But I'd say that there's been differentiation. Like there's a geographic differentiation. So in Japan, there aren't ETFs. So Metaplanet's been amazing, and in the UK, there's a handful of names. And then there's one just emerged in Korea. So it is a geographically diverse thing. They have an opportunity to distinguish themselves. But because of like what I've seen in treasuries, there is a certain like alchemy that like MicroStrategy has, which is MicroStrategy has made MicroStrategy shareholders into customers. I mean, he has orange pilled every shareholder of MicroStrategy, and he has maintained a premium, and he has transformed capital markets. That is what needs to be done for these other treasuries to be successful, and not everyone probably has that combination.
And which one's in your granny shot? I think I know.
Yeah, Semler Scientific is.
In full disclosure, I'm on the board. Why did you choose that one in particular?
Well, I like what Eric's doing. So he's taking a slightly different approach, and you need to give it time to work, which is he wants to say, I want Bitcoin as a treasury strategy, and I'm going to use capital markets to stack my Bitcoin, my sats. But he also wants to have a profitable operation that can fund the cash flow into building more Bitcoin. Now, at the moment, some shareholders are like, that's not the MicroStrategy. I want pure Bitcoin treasury. But that's not Eric's approach. I like Eric's approach. So, we just want to give it time. And he's brought some folks on board, including you, to really help amplify his message. So for us as a mid granny shot, it's in our SMID cap research portfolio. Look, we don't think you can go wrong because Bitcoin's 120,000. You're buying $120,000 Bitcoin in Semler, and he's acquiring more Bitcoin all the time. And if Bitcoin goes to $1 million, then Semler Scientific is gonna go up proportionally. So
we crossed 5,000 Bitcoin on our way to 10,000. So we appreciate the bullish sentiment.
Yeah.
Do you have a take on the preferreds that Strategy has issued?
Well, that's very novel, and it of course it has a framework. Michael Saylor's view is that Bitcoin's going to compound at a rate that justifies any relative level of liability that normally would be tough to stomach, and so that's why he's created these structures. But they've been enormously successful products, and of course, he could change and refinance them at any time. So I think the main thing is Michael Saylor is changing the reality of the stock market. And the reason is that he probably will end up being potentially the largest company in the stock market, okay? Especially if Bitcoin goes to $1 million. Yet he doesn't generate GAAP net income to justify it. He's based solely on the value of his balance sheet. And but that's not new to history, because when I graduated college, the biggest stock in the S&P, a top 5 name was ExxonMobil. And it was top 5 for 28 years, 30 years, like an entire generation. Graduated, worked on Wall Street. A top 5 name was a company that was only valued on the value of its oil, not on its net income. So like MicroStrategy is like replacing Exxon in lore, because for a whole generation people said Exxon was the biggest company, but you don't value it on earnings. Well, MicroStrategy could be one of the biggest companies in the world, and it's valued on its Bitcoin.
Wow.